It is trickier than ever to make any predictions about the US recession. But why? Let's find out. Destroying 30 trillion. We must destroy 30 trillion to reach economic equilibrium, a condition or state in which economic forces are balanced. If you haven't understood, let's go back to the end of the financial crisis. Few people coming out of the global finance crisis were confused about the US and European government moves. Because of the risk of huge financial contagion, and therefore, the Federal Reserve decided to use its balance sheet and bought toxic assets. Not just the Federal Reserve, but a bunch of governments worldwide did the same. Not to forget, the body of pseudo-scientific economists coined a term called modern monetary theory, and what's more surprising is that the government officials fell for the stupid theory. Yes, you'll realize why we called it stupid once you hear it. According to this theory, you can keep printing money and introducing it into the economy to smooth things out, and it also helps long-term growth. Surprise! It does not, but few government officials fell for this absolute pseudo-scientific scheme and printed money. Fast forward to the present year, 2023, after more than 14 years, governments around the world have printed around $30 to $35 trillion of money into the economy that should have never been there in the first place. This excess money should be eliminated from the economy. Inflation and recession are acting as catalysts. When we talk about the inflation in the past few months, it is not just about the true supply demand. We have been doing it since the year 2008. It is building up in the system, and the motive of everything is to destroy $30 trillion. The printed money should be destroyed by any form or method to achieve true economic equilibrium. Beginning of the beginning. When the government is not printing money like making candies, the true supply and demand, things that should not be propped up or buying votes, grifts engaged by the greedy folks, at least half of it should be undone to see the true value of things. When you speak about taking 30 trillion out of the economy, it's like 85 trillion in the world GDP. The bottom line here is it takes a lot of time to destroy such a huge amount from the global economy. The estimated time to destroy such money is around 3 years. 3 years of running off of money and not reintroducing new money. If you look at the big picture, we are still at the beginning. Yes, we have to endure a lot more inflation and recession. The beginning of the slow process of destroying a whopping 30 trillion. We can say that this is the beginning of something beginning. But this is not a recession. It is just a bear market we are in. Take a look at the price of assets. They are a microcosm of the much larger trend of fake money pushing asset prices and taking the money out, burning the fake money out, and finding the real price. So, it doesn't happen in 6 months like you were hoping. It takes time for the market to determine the real price of something. If you were hoping that this would end recession and inflation because the Feds raised 75, they'd raise 75 more. It takes around 24 to 36 months, which is 3 years, as said earlier, to get to the bottom of it. So, brace yourself for a choppy market. Finding a precise sense of inflation. The government gets the precise inflation size by comparing yesterday's price of goods or services to today's price. The Consumer Price Index, CPI, is calculated by government officials who build relationships with local businesses from random places across the country. The government officials connect with the business owners, have 15 minutes of chit-chat with them, and conduct surveys. For example, the government might have asked the payment rails like American Express, MasterCard, etc., to provide data in a structured way so that the government could find the absolute precise sense of inflation. This is the most suitable method to find the inflation instead of random sampling. You'll be surprised to know that the entire process is very rickety and hammers the entire process we use to manage the economy. In the next few months, the expectations regarding CPI will be low and will be worse by 7 to 9%. If you are wondering why, that's because a few factors are now uncontrollable, like rent. In the past few months, the rent has increased like any other in most of the areas. However, rent works on a 3-month lag, that is, we are going to reintroduce rent into CPI, and owner's equivalent rent is into the CPI, so, all we say is this is a sign of increasing CPI. Ukraine-Russia war. The global impact of the Ukraine-Russia war is another thing that's affecting the economy. Purchasing oil from Russia is now a moral dilemma for European countries. On the one hand, they shouldn't purchase the oil, forcing Russia to sell it to China or India. But, on the other hand, the economic condition is deterring them from participating in this proxy war. Russia misses no opportunity to break the back of Europe, and now, it's trying to do so by messing with its natural gas supplies. The German energy minister has stated that it would be a contagion to the Lehman Brothers if something like that happened. Considering all these aspects, it is clear that there's no mechanism to get back and check the rampant runaway costs in the absence of some real government changes. Ukraine-Russia war, the intention to either fight or cooperate with China, and all these things should get solved. But, in the meantime, the price remains to go up. So, the Fed should either step up or throw away the little credibility left with 8 to 9% inflation prints. They are going to overcorrect because of the pressure, and all the roads lead to lower equity prices. Contagion in the debt market and private equity. Financing all the equity leverage buyouts is the reason why we are drunk on debt today. These sketchy companies are teetering on insolvency, and private equity comes to their rescue. Private equity levers up the balance sheet with debt, and they price at the barely legal edge and what's financial. But all this is fine when the economy is growing. But if there are some recessionary forces or prices and an earnings imbalance occurs when prices go up, and the earnings don't, we have a recipe for contagion in the debt and commodity markets. We have had the overcorrecting and undercorrecting system for many years now, but the change here is, the stakes get higher and higher as the economy grows and things get complicated. We have more leverage. Record earning on Wall Street. You might be thinking that inflation and recession hurt everyone. You couldn't be more wrong. Not everybody went broke during the Great Depression and other major crashes, some made millions. Not everybody lost business during these times, some started new ones. Wall Street has record earnings in 1 year and more in the next year. So, if you are astounded and thinking, how's that even possible? Here is the answer. The most informed buyer in the market is the hedge fund, and the poorly informed ones are the retailers. Wall Street has done a poor job when it comes to managing retailers. You have to sell a few things because there will be fewer people with jobs to buy things. Some people don't believe in Wall Street and think that earnings will take a hit on the head this year. So, the entire world of equities needs to be repriced to a lower price, which will blow cash-burning tech companies. The government acknowledges that they've to protect the consumers, and all the laws are in place to protect the consumers at all costs. But, if you want people to make good decisions, and you give them a ton of money, and naturally, they act rationally and spend it, now we have to take it back from them, and it's not going to be easy or simple. Recession. Speaking about the recession, yes, people get fired, but there are also new openings. It is a continuous cycle. One must use intelligence and take risks to stay safer. Remember, it is the beginning of the beginning. The conclusion here is, some feel-good articles about the economy aren't going to fix a thing. We have to grind because we have $30 trillion to work through, a war to end, recession to overcome. But we can get through this with collective efforts and government policies.